Hello traders, Alla Peters on February 8th at 9:56 AST. Here's a weekly chart on oil chart present in front of you for years. One of my dearest graduates of the course been sending me email acquiring oil at reversal zone at 30. Exiting oil monitoring for short now. Bias is bearish. Firmly bearish. No surprise whatsoever. None. As most important hot pink line, Fibonacci resistance is a problem. Take a look how much pain it caused before. Remember that? This is what was happening in the months of May, June and July. What a pain and torture! No surprise whatsoever. And this is what continue happening in the months of September. Again, right now, that would be crucial support to the downside. These are the levels present in front of you for years. How to trade these levels, you must know the rules. These are institutional levels. This support is out. Market will head to here. I would love for oil to crash and burn. Oil will become so much more interesting if it will crash and burn back down to reversal zone. We will see very interesting volatility. Very important 50 level. Fibonacci is the only predictive tool in the market. This is the levels traded by hedge funds and institutions. If you're a day trader, you're trading hourly chart. Take a look at the levels that have been present in front of you since early January. Very bearish news on January 11th. Bullish rally until this very important Fibonacci resistance, hot pink line. What a ranging market. Another very bearish news following week. And I say, Fibonacci tells us very clearly bias is bullish. Another rally for 300 points. Another problem at very hot pink line that identifies the end of the minor trend. These are proprietary Fibonacci levels. You learn the rules, you can install it on any platform you choose. Levels traded by beginner traders to hedge fund traders in US and globally. We are right now at reversal zone. This is fluff traders. This would be a major problem, this level to the upside. If price will blast through this level, oil will become interesting. However, this morning oil is not giving me anything spectacular. This morning oil giving me only correction on hourly. Remember S&P this morning? This is fluff. This is bullish correction. We would love to see this bullish correction pick up the steam. This is how market testing you for knowledge and discipline. To the downside, this is crucial Fibonacci support. Doesn't matter what you trade. Doesn't matter if you're a day trader. Doesn't matter if you're a position trader. This is a chart that's been present in a trading room for the last 6 years. These levels may remain in a play on oil for the next 10, 15, 20, 50 years. All you have to do, pay attention to the rules. Remember exact same very hot pink line as we are sitting on Fibonacci support right now on S&P. This is where bullish correction on oil had ended. This is where buyers stepped in once again in 2016 and struggled at this Fibonacci resistance. This is key support to the downside. Fibonacci is the only predictive tool in the market. Everything else, background noise. Everything else, afterthought. So, monitoring oil very carefully. This is key support. This is bullish fluff. Today may be the day you will see complete collapse into oblivion on oil. Bullish fluff, no bullish rally whatsoever. All about this support, all about this resistance. That pure and that simple. And that will remain the key. That's what you're paying attention to. Back to S&P. I warned you since market open cannot short into this level. And here we are. You know where Fibonacci levels are? You do not sweat. You do not have heart palpitations. You're waiting for the rules to be met. Rules are met, you take a trade. Rules are not met, you are not touching the market. That pure and that simple. Alphys, let's talk. Oil inventories expectations are plus 2.5 ME. Anything higher is bearish news, anything lower is bullish news. Oil, unlike any other news, oversupply is bearish, undersupply is bullish. So, while S&P hanging for dear life between both minor trends, let's take a look on oil. So again, this is a level that's been present in front of you since early January. These levels remain in play today and may remain in play for many days to come. All depends on the rules. What are we expecting? This is key support, this is key resistance. Buyers are weak. Until price will get out of this area, sellers remain fully in charge. I remain major problem on oil at this resistance. This may be the day when oil will go into free fall. 51 was key support respected in the market since early January because it's institutional support. You never short near. Horrific bearish news did not mean a thing every single week. What will happen next? Will respect only due to volatility. The numbers do not matter. All the levels in front of you well before any news. You do not short near this support. You do not buy near this resistance. This is a brick wall. LYG, while we're waiting on oil, what we are dealing with S&P, very important hot pink line. Will S&P give us this? As you're witnessing exact same hot pink line on hourly chart, as I continue warning you, as we're discussing with students, sellers are more powerful than buyers right now. As I warned you, 90% chance this support will be broken. Drastically different structure than Monday. LYG, however, staged another powerful reminder. Do not short near. Monitor for bullish rally. This is crucial support on LYG. What LYG will do next will determine the rest of the story. LYG can collapse all the way back down to this support. This is your range on LYG right now. This is respected. LYG will head to reversal zone. At reversal zone, I expect absolute reversal, as you saw happen prior. So, right now, knowledge is the key. What to do with LYG. This is your channel, this is your support, this is your resistance. Ladies and gentlemen, oil news at any moment. Let's go to oil. So, as we discussed prior, this is the levels present in the room since early January. This is support, this is resistance. We expect this to be very important day on oil. This is final institutional support that sometimes by the end of the week I expect to be out. Pay attention next. So, key support this morning. Oil will give you extremely sharp spikes back and forth. We have no idea what the news is. Let's take a look. Horrific bearish news, horrific oversupply, oh my god, 7 times as much extremely bearish news. Clear on that? Why in the world is Fibonacci support respected? You as a day trader wondering what in the world is happening? Has oil gone mad? How is that possible? Such a horrific bearish news and oil rallying? once again, as expected. That's what happens every time. Cannot trade on the news. News is worthless. Fibonacci is the only accurate tool in the market. Again, this is very different structure than you've seen since early January. But again, you are witnessing cannot trade on the news. Here goes oil. As I said, this is a weak long-term chart, extremely bearish. The spikes will continue when it comes to day trading oil in excruciating pain. This is some marvelous news if you're a position trader, because the shorts on oil long term had been quite powerful. Clear on that? Oil heading to here. This is out, oil heading to here. Where to enter, you must know the rules. And that's exactly where not touching S&P. S&P hanging for dear life. Most important day trading chart had told us so. Our barometer had confirmed all we discussed. 60% sellers, 40% buyers. This is your range. Exact same levels as on oil long term. As this is where oil collapsing from. Key resistance on my favorite chart of all times, oil weekly, as expected. Next, this is what's to the downside. And that's the power of Fibonacci. All the levels in front of you, proprietary levels. And that's the levels we will concentrate in a bootcamp. That's all that matters. Fibonacci and price action. Bootcamp part of the course. Savings of $888 to new February and March students only. Highly encourage you to review the information on the website, bootcamp part of the course. And more than anything, listen to the graduates who trade anything and everything, from ETFs to stocks to options to Forex. Once you master price action, you can trade anything. Price is the same everywhere. All you have to do is identify what's appropriate for you and your account size.